Most traders lose money because they enter the market with weak confirmation, or even worse, or rather pure guessing. But what if I tell you that there is actually a three-step confluence entry strategy which is so accurate, so clean, and so powerful, it almost feels illegal to use it. Now, today, I will be breaking down the exact setup professional traders actually rely on quietly. And once you master it, your trading confidence will explode. I am Mr. Joshua that teach traders how to trade the smart way. You can see I am right now on a live chart. I'm on a live trade, trading with this particular strategy that I am about to show you. Watch this video to the end because I'm going to explain why I entered this buy on crash 1000 and why I'm on profit on this particular trade. Now, I use this three-step confluence in order for me to trade and to win the market. Just follow me as I teach you how you can actually use this three-step confluence strategy also. Now, if you try to trade for a long time and you happen to be inconsistent, you happen to be having inconsistent reward, random entries from left to right, you are just entering the market without confirmation, and then also having strategy that only works sometimes, not most of the times or all the time, then this video is actually for you. I'm going to show you the exact trick confirmation that filter out trade up to 90% of bad trade out, leaving only the highest probability setup for you to trade. Now, this works for Forex, it works for indices, for synthetic indices, it also works for gold, it works for crypto, it also works for stock. So this strategy is not just for Forex, is for as many commodities that I just mentioned: the gold, the crypto, the indices, the synthetic indices, etc., etc. Now, stay with me to the end because, like I promised, I will be showing you my particular rate chart and I will explain to you how I entered the trade and how I'm already making profit, as you are seeing in the screen. The first step confluence which I want to explain to us is the market structure. Is the market structure confirmation. You need to identify the market and know what the market is doing at all times. At that particular time that you are trading, you need to understand what the market is saying, what the market is doing. Now, we have three market structure. Market structure is divided into three. We have the uptrend, we have the downtrend, and we have the range market. Now, I have done a video already on market structure. Attached to this video on the description side, I will be putting the link so that you can actually learn market structure. If you don't know what market structure is, I'm going to attach the video in the description side of this particular video so that you will be able to learn market structure from beginners level to advanced level. Now, the first thing about market structure is you need to understand if it is actually in a trend, and if it is in a trend, it goes upward or downward, or it is in a ranging market. Now, if it is in an uptrend, you'll be seeing it making higher highs and higher lows, making higher highs and higher lows. But if it is in a downtrend, you'll be seeing it will be making lower high and lower lows. That is for downtrend. It's making what? Lower high and lower lows. Look at it. That is what is happening. That's what is happening. You are seeing it live here, which I will be showing you, and I'll explain all these things. Now, when it is in a range market, when we're talking about range market, that sideways market. It is not in a trend. Now when it is not in a trend, you need to be careful. I always tell my students, when it is in a trend, stay away from the market. In fact, when you don't see trend, you don't trade. When you don't see trend, you don't trade. That is the rule. Now look at it. It's making, when it is in a downtrend, this is downtrend, it will be making lower high, which is this, and lower low, lower high, and lower low. This is lower high, this is lower low, lower low, and then lower high. Now that is for downtrend. And when it is in a ranging market, it means that there is no volume in the market. Look at here, this one. Let's take example, this one, an uptrend. It will be making higher high, higher lows, higher high, higher lows, then it will go up again to make another higher high, and then higher lows. Look at it continuously. That is how it continue to move in the market. So if you do not see any structure, no structure, no trade, this alone filter out poor trade by 40%. This alone filter the trade, the trade 40%. Only trade in direction of the structure. No reversal guessing, no gambling. If you do that, you are going to be ahead of the market 40%. Are we together? You will be ahead of the market 40%. 40% accuracy. Now, the second step confluence that I will be showing us is the key level confirmation. Now, there are what we call key levels in Forex. Key levels. Not just Forex. Generally, there are key levels. Now, look at where is our BTC here? That's crypto. Look at the crypto. Now, we discovered that crypto fell drastically in recent time. And look at what is happening. It is now what? It's now going up. But before that, look at on 1 hour time frame. This place that it reversed from, this place is a key level. This is actually a demand zone. This one is a demand zone. This is actually a demand zone. This is a demand proof of demand. So now it has passed this level. It is at this level. Now there is tendency that if it did not go up to this particular place, once it reaches here properly, it will sell what? It will sell down. Now this is what we call key level confirmation. Why? Because here is actually a supply zone. So you need to understand this. You need to understand this. Now this is for BTC, that's Bitcoin. This is for Bitcoin. Let's move to our trade, because I'm using this as an example so that we'll understand what we're actually doing here. Now you need to understand what key levels. Key levels. Once you get the market structure, you understand what key levels. Now once direction is confirmed, you must locate a strong level of interest. Very strong level of interest. And what are this level of interest? In Forex, we are having many levels of interest. Now they are up to 6, which I want to explain to us. Now I have video on all of these levels. I'm going to be dropping the link on in the description button so that you can watch them and understand this video fully. Now the first level you need to understand is the major support or resistance level. Major support or resistance level, you need to understand this. Major support or resistance level, you need to understand it. You need to understand order blocks. I have video on this, very simple step-by-step video. Now you need to understand order blocks. You need to understand fair value gap. You need to understand demand and supply. You need to understand trend line bounce. Now trend lines can either bounce or break. So I've done video on that also, on trend lines. I'll be dropping it on the description button so that you will click and watch. Now, trend lines bounce, and then we also have key psychological levels. Now, this key psychological level is our sentiment level. Key psychological level is our sentiment level. Now, the market react to those levels because that is where big money enters the market. So every time you reach there, market must react to this particular level. Price must react at a level before you consider it as an entry point. Price must react to a key level before you consider it as what? As an entry point. Put that at the back of your mind. Now, this alone, if you understand key levels, this alone filter 30% of bad setup away from you. 30%, which means that you are already having 70% accurate win rate, because you have combined the structure, market structure, you have combined key levels. This alone is 70% accurate. Now, then what is the conclusion? The third one, the third step is the entry trigger confirmation. The entry trigger confirmation. Now, this is where accuracy goes from 70% to 90% plus. Now, if you can get this understanding of entry trigger confirmation correctly, now you're going to move from 70% win to 90 plus percent win. Now, your entry must be validated by a trigger. Now, these triggers are usually what push you to say yes or no to the market. You get it? And I'll be teaching us, I'll be sharing with us little about this, because there are some of these triggers which I've done video on these triggers. I've done this video on this trigger. I'm going to attach it also. Now, the first one you're going to consider in this trigger, entry trigger, is strong engulfing candle. At the end of, or at the close of every strong engulfing candle, is actually a sign of what? Of trigger, entry trigger. For example, now you enter here for a sell. No, it's actually a very good trigger. It's a very good trigger. That's on a 1 hour time frame. I'm using 1 hour time frame now. That's a very good trigger when you have a strong engulfing one candle. The next one is when we have a pin bar and rejection week. When there is pin bar and rejection week. When there is pin bar and rejection week. Now, these are types of what? Now look at this rejection week. You see the rejection week here? See, we have the rejection week here. See them here. We have many rejection week at this particular place. Now, it has given me sign that truly we are what? We are going to continue the buy, and look at it. Perfect. We're already making profit. In fact, let me buy more. Let me buy more. Already making profit. See, perfect. I'm even buying more right now to tell you that I'm confident on what I'm actually teaching you. Now, when you see pin bar and also rejection of week, is actually a sign of what? Of entry. We also have break and retest what? Candle close. When there is a break and retest of candle, for example, now you have a break, come back to retest before it continue. That is what? That is an entering candle. Is also an entry trigger. Is also an entry trigger. Now we also have RSI break from overbought to oversold. When it is low here going up, or when it is up here going down. Now that is RSI. This is my RSI. Now I've talked about RSI. I have videos about indicators. I talk specifically about RSI. You can watch it on the description button. I will drop it on the description button so that you can be able to watch it and learn. You need to learn. Now 2025 is coming to an end. This is already November, mid of November. What will you start your 2026 with if not to learn Forex? what will you start your 2026 with? You need to learn for it. In fact, if I am you, I will share this video to my friends, my family, my neighbors, people that want to learn for it. Let them just come and watch my video to the end. In fact, they can even chat me up for free training, because I do free training. You can chat me up for free training, and I'm going to train them for free. I will train them for free. I'll train them for free. Now, after you have gotten understanding of RSI break from overbought oversold, we also have volume spike confirmation. If there is spike of volume, especially when there is news, spike of volume, spike of volume. I've talked about volume quite some number of time also, whereby money is being put in the market and then the price begin to move. Now that is volume. And then we have also one of the entry trigger, which is optional, which is moving average crossing. Now, moving average crossing is optional. It's not by force. It is optional. Some people don't like the method, but there are some that the method actually suit them. So you can actually use that also. Moving average what crossing. I'm just telling us so that we can choose the one we love among all of these, and we can apply them and use the three confluence to trade. Now, the rule of this is I never trade without a trigger, a clear trigger, not just a trigger, a clear trigger. Your trigger is your final yes and your no. So don't trade without a clear trigger. Be careful. Don't trade without a clear trigger. Now, let's go now to my chart. Let's go to my chart. Now, I promise us I'm going to tell us why I entered this particular trade. Now, the first thing first that I explained to us is the market structure. Is the market structure. I said when the market is making what? Higher highs, it's making what? Higher lows, or making lower lows and lower what? I now look at it now. I look at this market, I look at this price, and there is something that happened. Market reaches here, could not break downward, and then begin to what? Go down, and came back again and give a structure. Now I'm working based on the structure now. Now look at what happened. This is actually our step one, which is what? Making higher highs. Is already making higher highs. That is why I know that it's going what? For a buy. It's already making higher highs. Though I can see divergence here. I can see divergence here and divergence here. But that is an aspect of it. That's an aspect of it. So I saw higher what? Higher high and higher lows here. That is why I decided to enter a buy here. That's the first reason. Now the second reason is I filter it by area of support. Now this is actually area of support. This is actually an area of support. Now I saw the support here, so I decided to trade the area of support. This is area of support. You understand? Area of support. Don't forget, I have a video on support and resistance simplified. You can watch it. I will drop it on the description button so that you watch it. Now I saw the support, and after seeing the support, the third one is my entry trigger. What did I do? I went to the 15 minutes time frame and I look for a structure which was actually clear for me, which is actually rejection of prices, pin bar, and rejection of weak, rejection of low prices. Look at it here. Looking at this is already a double bottom, so I had no option than to what? To trade it. And this is how it will go. This is how it will go. It will go like this, then come back and then continue. Now this is how it will continue to go until this particular level is being reached in the in the trade. So now, so stop chasing every candlestick that you see in the market. Stop trading noise. When you see small thing, you just enter into the market and trade noise. No, 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 no. You need to settle down. Now these three steps will actually help you to eliminate noise from your trading. Stop entering without confirmation. You need to confirm every of your move. Why? Because you are not gambling. Stop what? Stop trading without confirmation. Now when you combine these three elements, which are the market structure, the key levels, and also entry trigger, you get a strategy that is very clear, accurate, and reliable. This is why professional traders seems too accurate. They use this confluence for their trade, and it almost look as if they are performing magic in the market. Now, if you found this breakdown helpful, smash the like button so YouTube pushes this video to traders that need help, and also drop a comment saying three-step confluence. And don't forget to subscribe to this channel so that you will not miss my next strategy. I will be sharing some amazing strategy with us before the next coming week. So see you in my next video. Don't forget, I am Mr. Joshua that help traders to trade the smart way. Now I'm enjoying my profit. You also can be enjoying your profit such as this. All you need to do is for you to watch this video over and over and learn, over and over and learn. See you. Have a great day. Thank you for watching this video. Do like, share, comment, and subscribe to this channel for more information.